Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of Shree Pushkar Chemicals and Fertilisers Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Faraz Ahmad from Orient Capital, their investor relations partner. Thank you, and over to you, Mr. Ahmad.
Thank you, and welcome to the Q1 FY23 earnings call of Shree Pushkar Chemicals and Fertilisers Limited. Today on this call, we have Mr. Puneet Makharia, Chairman and Managing Director, along with Mr. Deepak Beriwala, CFO, and Mr. Nitesh Kangle, Company Secretary. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page 2 of the company's investor presentation, which has been uploaded on the stock exchange and company's website as well. With this, I hand over the call to Mr. Puneet Makharia for his opening remarks. Over to you, sir.
Thank you, Faraz. Good afternoon, everyone, and welcome to Q1 FY23 earnings call of our company. I hope all you have got an opportunity to go through our financial results and investor presentation, which has been uploaded on the stock exchange as well as on the company's website. Friends, I will take you through the financial and operational performance of our Q1 FY23. Despite macroeconomic challenges, supply chain distributions, and inflationary scenario, we are pleased to deliver steady financial performance for Q1 FY23. Our focus had been to provide sustained and consistent volume deliveries to our customers, and we have ensured that we delivered that to the best of our possible ability. Admitting the global uncertainties which loomed in the previous few quarters, our chemical division has reported a volume growth of 13% in Q1 FY23 versus Q1 FY22. Owing to an increased demand for dyes in domestic as well as export segment, we are further optimistic on seeing better realization and volumes upstick to our entire chemical division. The volumes in the fertilizer division saw some dip due to seasonality impact. However, it has witnessed higher realization which can be attributed to increase in the subsidy offered by the government. This has been a welcome move for the fertilizer segment as it was the need of the hour, and we are sincerely grateful to the central government to address this issue. Despite the ongoing global challenges, the company is optimistic about overall growth and demand in the quarters to come and improve capacity utilization and the higher efficiencies. Friends, our consolidated total sales volume for the quarter witnessed a drop of 9.3% on year-on-year basis, which is inclusive of 13% increase in the chemical volumes and 10% drop in our fertilizer volumes. Even after the drop in our total volumes, our revenue has grown by 42.4% on year-on-year basis. Our EBITDA has increased by 14.7% in comparison to Q1 FY22 and almost 10% in this comparison of the preceding quarter. Our PAT has increased by almost 8% as compared to the corresponding quarter of the previous financial year and 3% in comparison to Q4 FY22. With the higher capacity utilization in the months to come, we see a great scope of outperforming our past financial numbers. Now, an update on the capex done by the company. Our Unit 5 of 119.5 crores approximately has been completed up to 30th of June 2022. The dyes intermediate plant is ready to start commercial production. The dry trial runs has been completed successfully. We were awaiting for the explosive department permission to start this dyes intermediate plant at Unit 5, which has been received by the company on 8th August 2022, and the commercial production is likely to start very shortly. Sulfur chemistry plant, the commercial production has already been commenced except the thiachlorine plant. Finally, we are one of the few market players with both forward and backward integration capabilities. Our company has 8 locations across India, put one more, which is the solar, and total is 9 locations and is progressive. We are highly regulated and we are proud to tell you that we are still a zero waste company operation. With this, friends, I would like to hand over the call to Mr. Deepak Beriwala, who is our CFO and who will take you through the financial and operational highlights of Q1 FY23. Over to you, Deepak.
Thank you, sir. Good afternoon, everyone, and a very warm welcome to everyone. Our total volume for QY FY23 dropped by 9.3 on year-on-year basis, with the total volume being 49,485 metric tons in comparison to 54,543 metric tons in Q1 FY22. Volume in chemical sector grew by 13% to 1981 metric ton in Q1 FY22 versus 1753 metric ton in Q1 FY22. Fertilizers volume for Q1 FY23 dropped by 10% to 47,504 metric ton in comparison to 52,792 metric ton in Q1 FY22. On revenue front, our revenue for Q1 FY22 stood at rupees 168.8 crore as compared to rupees 118.5 crore in Q1 FY22, a growth of 42.4% on year-on-year basis. Our consolidated EBITDA for the quarter was rupees 21.2 crore for Q1 FY23 as compared to rupees 18.4 crore in Q1 FY22, a growth of 14.7% on a year-on-year basis. EBITDA was also higher on Q-on-Q basis by 10%, where the EBITDA for Q4 FY22 was rupees 19.3 crore. EBITDA margin for Q1 FY23 stood at 12.5%, and PAT margin for Q1 FY23 stood at 8.60%. PAT for Q1 FY23 was at rupees 14.4 crore versus rupees 13.4 crore for Q1 FY22, a growth of almost 8% on year-on-year basis, and a PAT margin of 8.60%. With this, we can now open the floor for discussion. Thank you so much.
So would you like to begin the Q&A session?
Yeah, we can go ahead.
Sure. Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Shubham Agarwal from Equitas. Please go ahead.
Thank you for the opportunity and good afternoon to everyone. Sir, firstly, I'd like to congratulate the entire team because we have posted a great set of numbers in a tough environment. So my first question was related to the fertilizer division. So last quarter you mentioned that Diwanganj facility, we had faced some closure notice and we were working to get it lifted. So I wanted to know what's the current situation of that closure notice. And secondly, with regards to the expansion in Kisan Phosphate of 32,000 tons, we were supposed to get a report post which we were supposed to start the plant. So again, I wanted to know the current status of both this plant.
Thank you, Shubham. First of all, let me take you through the Diwanganj plant. Diwanganj plant, there was a Central Pollution Control Board notice which was issued in the year 2016 prior to the CIRP process begin with Madhya Bharat, and that was not in our knowledge. But when we took over the company, then it came to our knowledge that the CPCB had already issued a closure notice. Now, finally, as on date, the update is as follows. CPCB closure order has been revoked, that has been lifted. All the statutory approvals has been already received in pertaining to the Diwanganj plant. Now, the biggest challenge what still we are facing is an access road entry to the Diwanganj site. As we have mentioned in our resolution plan that this particular factory plant is under a landlocked area which is owned by the earlier promoter. And though we have an order issued by NCLT that the same access is to be provided to us, we are in regular touch and very close follow-up with the local administration for providing us access to the road. After almost a year of negotiations and follow-ups, finally company has decided to purchase that access road from the earlier promoter, and that is in the final stage of in the documentation. And we hope that in next 10 days or 15 days, because the August month has lot of holidays because of the Krishna Janmashtami and Raksha Bandhan and all these things. We believe that in next maximum 10 to 15 days or so, we would be closing the registration of that particular access land. Once we are done with that, Shubham, then I don't think any hurdles will be there for us. And this plant is fully ready to start the production. This inspection and induction into NBS policy and pollution matter and other statutory approvals, all are well in place, have been received, except this access road, which we believe that should be completed in next 10-15 days. Immediately after that, we should be able to start this plant. Though we have missed this season in the Diwanganj plant, but we are quite hopeful to catch up with the next season coming there on. Secondly, coming to your Kisan Phosphate expansion, that expansion is completed. We have already received the PDIL approval for 132,000 tons of the capacity. Now this Kisan is 132,000 tons capacity plant, and this particular season the sale of Kisan has dropped in comparison to the last year, because of the pricing issue, because of the abatement of the subsidy realization. So, but now we are quite hopeful that in the coming season we will be able to make up the lost business.
Got it. Sir, so with both this Diwanganj and Kisan Phosphate, is it safe to assume that the entire 590,000 ton that we have estimated, so this will be now available for entire H2?
132 is Kisan, 165 is Madhya Bharat, 132 is Diwanganj, and it is 529,000.
590.
And Pushkar also. It is around 590,000, Shubha.
So this entire will be available for entire H2, is what we can assume.
Yeah. This should be entirely available.
Okay. And secondly, so our volume target of 370 to 4 lakh ton, do you think this is now achievable because there is this delay in starting production for the current year?
I think, Shubham, we should be able to achieve close to 300,000 tons of SSP, because first season has already, is on the verge of getting over.
Got it.
We now only have the second season with us, and we are quite hopeful achieving our targets in that.
And the realization would be around 15, 16 rupees right now?
Realization would be around 8 or 7,500 or 500, around 16,000 or so.
So then it is safe to assume that for the current year we can do close to 450 or 480 crore of revenue from the entire fertilizer division.
In last into 16 yeah, moti, approximately 450 crores of the business we should get from the fertilizer business in this current financial.
Perfect. Got it. Now, secondly, coming to the chemical division, sir. We have witnessed that across the industry, chemical companies who are basically till DI, they are facing a problem with regards to the cost, and because they don't have dye stuff, they have toned down their DI production, and some of them are facing loss of profitability also. So I wanted to know, in the current scenario, how we are basically seeing the market going ahead, and is there any dumping that we are witnessing in the chemical market currently?
See, what you said is right, Shubham. As of now, there is definitely pressure on the volumes, pressure on the sales, and also pressure on the pricing and the cost of the product also. And if you see, and that this pressure is going on practically for the last 8-9 months or so. Few of our competitors are even facing closure also because of some other environment issues also. And those plants are also closed for quite 2 to 3 months or so. Definitely, selling pressure is there, cost pressure is there, What happened is that, in the last 3, 4, 5 months, the raw material prices had gone too high because of some sentimental issues, or maybe because of Ukraine-Russia war. For example, let me tell you a product called sulfur, which is our raw material. This is just an illustration I am giving you. Sulfur was prevailing around $450 almost a month back.
Okay.
You'll be surprised, it has come down to $100 now.
Oh, wow.
Even the local refineries have dropped their prices by almost 30 to 40% or so. So there is definitely pricing pressure in terms of the basic raw material. There is a pricing pressure in terms of the fuel, what we use, like the coal, is that. And because of that, the pricing pressure is there. I believe that in spite of the pressure also, we have maintained our volume growth. We have focused on 2, 3 main focuses. A, let us maintain the volumes. B, let us, maintain our receivables, our debtors. Let us be a cash-rich company. We have collected cash and maintained our volumes in Q1. So we believe that in a similar lines, we will continue our Q2 also, because I personally see a pressure in Q2 also.
Okay.
From Q3 onwards, like from the Diwali onwards, I believe that the situation would come back to normalcy. Because right now, this is a very short time phase which the industry is facing. The raw material pricing pressure is there. Because of that, the sales volume pressure is also there. And I think that this pressure should be released somewhere by the mid of Q2 or so. Any moment we are expecting release of this pressure. And in this pressureful environment, we are focusing on 2 issues. Let's not have the inventories at the factory. Let's build our volumes. Let's not lose our business volumes. At the same time, let's have a parity in our realizations and our book debts.
Got it. So, sir, it is very fair to assume that the Q1 was a bottom result. Hence, forward we see only improvement in chemical division, barring Q2, most likely.
Shubham, I would be very honest to you, because I would see a similar pressure in Q2 also.
Okay.
What you said is 100% visible and expected in Q3 onwards.
Got it.
Because we are almost, 1/3 of the Q2 has already been passed. And I see a similar kind of a pressure in Q2 also, as we did, as we realized in Q1.
Sir, so for the current FY23, let's say we have done a 262 crore revenue last year for entire FY22 in chemical division, dye intermediate.
You are saying in H1 21-22 we did 260.
No, total FY22 we delivered 262 crore revenue last year.
260 crore, no?
No, it is more than that.
350 crore on standalone and 580 on consolidation.
It is 350 on standalone in the whole last year, and on console it is 584, something like that.
No, I'm talking specifically of chemical division.
Okay, that figure is not.
Yeah,
maybe
so
let's go ahead with your question.
Yeah, so chemical division, last year it was 262. Now, given the current circumstances and order visibility, how do you guide for FY23?
See, I don't have right now, individual vertical-wise figure, but I can give you overall insight what I feel for 22-23. I think you can take inference from my, feelings as per your own this thing. I personally feel like, if you see that in Q1 FY22, we did 118 crores.
Okay.
And Q1 FY23, we did 168 crores. So there is a volume growth of 40% approximately.
Mm-hmm.
I believe that the similar growth will maintain in the whole financial year of FY23. Plus, Unit 5 intermediate plant is yet to commission, means yet to start the commercial production. So that business would also be added into the total revenue. In all the probability, I personally believe that we should be able to minimum achieve 850 to 900 crores of business in this financial year, taking into a pressure of Q2 and starting Unit 5 in, with immediate effect, then the Q3 and Q4 also.
Got it. Got it. Fair enough, sir. That's it from my side. I'll come back in the queue.
Thank you, Shubham.
Thank you. Ladies and gentlemen, to ask a question, enter star and 1. We have the next question from the line of Sanjeev Damani from SKD Consulting. Please go ahead.
Namaskar. My best wishes for this. Congratulations for excellent results. Am I audible? Really, you have created a very fine enterprise, sir, and congratulations to the promoters and management of this company. I want to start with one thing, that can you kindly explain me the subsidy mechanism as far as single superphosphate fertilizers are concerned, and as far as urea, etc. is concerned, because we understand that government is now doing direct payment to the buyer. So is it that way, and what are the quantum in single superphosphate? So can you kindly explain me for my understanding? Thank you.
See, as far as SSP is concerned, Damaniji, there is a NBS policy which has been notified by the Government of India based upon its nutrients into the product. The government has allocated the amount of subsidy on per nutrient basis. So on the basis of the total nutrients held into SSP, the subsidy figure is derived by the Government of India. On the base of that notification and base of that the individual nutrient subsidy base, the total subsidy works out on SSP is rupees 7,513 rupees a ton. And the mechanism on the subsidy is that the subsidy is not given to the farmers directly; it is given to the manufacturers. Once we have to sell the product through the POS, that is the point of sale machine, on the basis of POS and FMS and MMS and this IFMS system, we have to feed in the data into the government portal. On the basis of that data feeding into the government portal, whenever the product is sold, the farmer has to put his thumb impression, which is linked to his Aadhaar card and his land data records. Then the subsidy is authorized on the POS. POS is a point of sale machine which is linked to their thumb impression, linked to their Aadhaar card, and based upon their means, this entire system is mechanized and completely digitalized. On the basis of the material sold on the POS, we are eligible for the subsidy. Then we get 100% subsidy by Government of India on this basis. And the urea you said is that urea is a completely different ball game altogether, not with SSP. In urea, it's a canalized product. Nobody can import for selling into the domestic market. It is allocated by the Government of India on the port wise. Then it's a different business altogether. But the business of SSP and the business of urea is totally different.
Oh, thank you, sir. Sir, here I would like to know how many days it takes to get our subsidy. Is it very prompt or delayed, or how it works?
Oh, it has improved much than the last time, and it is still improving, and it is completely digitalized. This is on the basis of first come first serve basis.
Okay. So the subsidy part is what is government fixing, and do we have liberty to fix our selling prices independent of subsidy component?
No, but for that we have to give the cost data to the department. On the basis of the cost data analysis, we can fix our own pricing. But yes, government has, they have not controlled it directly, but yes, they oversee the pricing pattern of the MRP also.
It is regulated, and sir, in that sense, that is it being considered monthly basis or quarterly basis?
It is season basis, sir.
Season basis. Before that, so during the period of the season, if the raw material prices goes up, then we have to only bear such expenses.
No, it is generally we always keep that much of margin looking into the market fluctuations.
Okay. Sir, one more request, sir, regarding capacity utilization of our various products. If these data are somewhere available, I can access it, or else if they can be published that we have XYZ number of products and these are the capacity utilization for this quarter. If we can get that.
Our investor relation team would provide you that is not a problem. You can share your contact details with Orient Capital. They will provide you that.
One last question about dicalcium phosphate. The last
Mr.
question, madam.
Damani?
Okay, I come in the queue. Okay, no
Yes,
problem.
sir. Thank you. We have the next question from the line of Forum Makim from FY23 Capital. Please go ahead.
Hello, sir. Congratulations on a great set of numbers in a challenging environment. Sir, my first question would be on the chemical side. As you mentioned, there's been a lot of pressure in the industry, and we are also seeing closure of some factories in Gujarat due to the pricing pressure and the demand pressure. So what have we done differently this quarter that we have been able to post a volume growth for the quarter?
Madam, for that, the basic difference between ourselves and our market competitor is the business model. As we have been always mentioning that we are a zero-waste business model, and whatever the waste we generate from various plants is consumed by a different plant as in a form of a byproduct or its raw material. And that is the beauty of the whole business model, and that has given a completely stable and sustainable business model to our company. That has been a winning edge for us, and because of that, we are, much better compliant stage than others. So that is the reason, those plants might have been closed during the first quarter, maybe fully, maybe partially, I don't know. But we have been able to use our facilities on a whole quarter basis. So because of that, we could generate better volumes in terms of our sales, as well as like the dealer network, what we have for our diesters and intermediates. We, had good orders, and we maintained the volume of that.
So what would be a total volume growth in the chemical segment? I think this quarter we have excluded the acid volume, if I'm not wrong.
Acid volume, I also believe that we have kept separately. Earlier we used to put it like dyes, intermediates and acid, as a one chemical sector. Now this time, to give a better visibility, we have, shown every division in a separate manner instead of showing it in a single chemical sector. So I think we have divided into three phases, dyes, intermediates, diesters and acids. So this has been shown separately.
The number given in the press release is of dye stuff or dye intermediates?
In the press release,
Dyes and dyes intermediate.
Dyes and dyes intermediate we have shown.
But so earlier we used to report a higher number.
Chemicals, no?
Chemicals includes only dyes and dyes intermediate.
And where is the acid?
Acid का अपन separate नहीं दिया.
Acid separate नहीं दिया है, तो खाली chemicals दिया है.
Chemicals with dyes and dyes.
What we have given in the press release is a chemical which includes diesters and intermediates. Acid, I don't think we have given into the press release, but can be given to you separately, vertical wise, the data of the production, what we did, what we sold. But for your information, acid we have sold around 4,668 metric tons in this quarter, in comparison with 2,780. In comparison with 1,777 tons of acid what we sold in the last quarter. So there is a almost growth of 2.5 times into acids in comparison with Q1 21-22.
Right. And
we will share a sheet with you through our investor relation team, which will have the individual capacities of individual vertical wise. That will be a more visible slide for you.
Right. And so what has led to the improvement in margins Q on Q?
I think if you ask me, though we see improvement margin in comparison with Q1 to Q1 in the last financial year to this financial year, but then if you ask me personally, that 118 crores business did you 13 crores, 168 crores business gave you 14 crores. So after 40% improvement into the revenue, but hardly 8% improvement into the PAT. In my personal view, there is much scope of improvement, but only because of the pricing pressure we could not do so. We believe that Q3, Q4 would be much better.
So for the whole year, what would be a margin guidance?
Makim, This is the operator. Ma'am, you'll have to come back in the queue. There are participants waiting.
Sure. Thanks.
Thank you. We have the next question from the line of Chirag from Keynote Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, most of my questions are answered. There are few questions in my mind right now. One is, could you give me revenue bifurcation of how much did we earn from Kisan Phosphate and Madhya Bharat?
Yeah, we have that, Chirag. Pushkar did 110.20 crores. Kisan did 33.68 crores. And Madhya Bharat did 24.86 crores in Q1 22-23. Total is 168.8 crores on consolidated basis.
Okay. Thank you, sir, for that. Another question is, sir, as we have given a similar guidance of what we are going to achieve the total top line for the year, which we have given earlier, could you give me what kind of margins are we expecting on operating levels? Will it be stable around 13-14%?
You are talking about PAT levels or EBITDA levels?
EBITDA levels. EBITDA levels.
I think, yes, EBITDA levels, we should be able to maintain minimum 13 to 14% level, Chirag. And we are hopeful for achieving better results from Q3 onwards.
Okay. Fair enough. Sir, my last question is, what kind of capex have we planned for FY23?
Chirag, as of now, for coming year, we have not announced any such capex. And our total focus is on consolidation phase as of now, Chirag, because company has did almost 170 crores of capex in last 2 to 3 years from its internal accruals without any single debt. Around 120 crores of capex company did in Unit 5, then 22-23 crore in solar, then 28 crore rupees in Madhya Bharat acquisition. So, in spite of doing all this capex also, company is able to maintain its cash flow. Company is able to maintain its, tagline for the zero debt also. And we are able to maintain good amount of cash reserves also in spite of spending 170 crores. Now, the focus what we have is that to be focused on the consolidation phase. Let us achieve the full capacity utilization to the maximum capacity utilization for the capexes what we had made in the last couple of 2 years or so. Then we talk about the next capex. Though those are in paper, in plan, but we would not like to discuss at this point of time. Our first focus is to consolidation phase and achieve 4-digit revenue, this as soon as possible, probably in 23-24 or so. Then we will talk about the next capex.
Perfect. Totally makes sense, sir. Thank you so much. My last question is on, as you have given a guidance of that Unit 5 has already completed its dry trial. So should we expect that from Q2 or Q3, we would start doing a quarterly revenue of about 40-50 crores from this unit?
Chirag, I would not like to, say much on this point because honestly, we have been talking this subject for the last few quarters, but we have not been able to deliver because of unforeseen circumstances which were out of control. Now, if you see that we have covered all the major hurdles except one permission was left out, and without that explosive department permission, we couldn't get a raw material which requires this license. Now, that license we have received on 8th of August on mail, right? So we are, working on the possibility of getting the raw material as soon as possible. The moment we start this plant, and if this plant is started completely, Chirag, I think around annually basis, Unit 5 should give you minimum 200 to 250 crores of the revenue on a year basis. On a conservative side, you can say yes, 225 crores on an annual basis. We'll immediately, there is no problem in getting these kind of revenue numbers.
Which means we will have an asset turns of 2 times, correct?
Pardon?
On a full utilization base, we might have an asset utilization of 2 times for Unit 5.
Yeah.
Okay.
Right.
Thank you so much, sir.
Thank you, Chirag.
Thank you. Before we move to the next question, we would like to request participants to limit their questions to 2 during the initial round. We have the next question from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir, for taking my question. just if you can share, so we completed and commercialized the sulfur chemistry. So if you can share the details on it, did we install a sulfuric acid plant? What would be the capacity, and if you can share the details on it?
Hey, Mr. Tiwari, as far as the acid plant is concerned, we have got 2 blowers, and out of 2 blowers, this plant can easily come out with a production of 150 to 175 tons on a daily basis. As of now, we have commissioned only 1 blower. The reason being is that, the second blower, why we have not commissioned is that our dye intermediate unit is yet to start, which will be starting it shortly. So once we start our dye intermediate expanded capacity, then we will be putting it on a second blower also. Then we will have almost 150 to 175 tons of production. If you see in Q1 21-22, we sold around 1,777 tons of acid. And in Q1 22-23, we sold around 4,668 tons. So this extended volumes have been achieved from Unit 5, this acid plant.
And sir, if you can share what was the average realization for sulfuric acid in Q1, and what is the current prices now for sulfuric acid?
The sulfuric acid, that individual product pricing is low. We don't have, sir, but I can give you that approximately Q1 this year, the acid was sold in a range of around 12,000 rupees to 13,000 rupees a ton. Approximately this I am giving you. And now in Q2, since the sulfur prices has gone down, it should be around 9,000 to 10,000 rupees a ton.
And sir, lastly, we have this backward integration for sulfuric acid. So if you can quantify what would be the savings per kg for this backward integration of the sulfur chemistry?
This requires a whole calculation. We can feed you these details because what you are asking is an extremely business operational issue, right? So, we can give it to you. That's not a problem. You can post this your query to our investor relation team. They will, get in touch with their CFO and they will submit you the detailed calculation of that. That's not a problem.
Sure, sir. Just last question on this sulfur chemistry. The expansion which we have done, this is for backward integration or this is for external sales?
This is for the external also as well as for the backward also, both ways.
So 50-50 like external, 50% backward, if I am correct.
Almost.
Okay, thank you, sir. I'll get back in the queue. Thank you, sir.
Thank you.
Thank you. We have the next question from the line of M. Srinivasa Rao, an investor. Please go ahead.
Thank you, madam. My questions are answered. Thank you.
Thank you.
Thank you, sir.
We have the next question from the line of Rajesh Jain from NB Investments. Please go ahead.
Good afternoon, sir. Congratulations on a good set of numbers for the quarter. Sir, it's regarding the sulfur chemistry, where in the press release it is mentioned that except thionyl chloride, the approval has been received. On a curious note, wanted to know any problem with this product?
No, sir. Basically, that approval what we received is from the explosive department, and that permission is pertaining to our dye intermediate plant. As far as the thionyl chloride plant is concerned, that doesn't require any such kind of a permission. There are certain work pending in completion of the plant, and that has not been started, which will take around 30 to 45 days more to start that plant.
So it is a civil construction or whatever the other pending work that is to be done by the company side.
Construction is completed. The last leg of certain pipeline and wall fitting and utilities and instrumentation is going on. The major time-consuming job is already completed, sir.
Okay, fair enough, sir. Sir, this DI capacity, which you are assuming that it will get commissioned by the end of this month, how much time, based on the current demand, will it take to ramp up to full capacity, sir?
I think by Q3 we should be able to ramp up to the full capacity.
Okay. So that means by Q4 you will have all the capex which we have done running at their full capacity, maybe 100%, except in the case of fertilizers.
100%, Mr. Jain.
Sir, Sir, okay. My last question, you have already mentioned that you do not want to discuss anything about the next CapExes. But knowing that nowadays for the chemical industries, the environment department takes more than a year or two to give the approval. So as by Q1 of next financial year, we should be running all the the facilities in full capacity. So would it not take more than a year or two to get the approval for whatever the new CapEx that you want to start?
Sir, that is already in the pipeline, but I would not like to talk much on that issue, Mr. Jain, because we want to be focused on the existing activities, which are our handful, thing we have to complete and consolidate. Till we complete that, we will not discuss on this point, sir. Probably, in our this Q4 Concall, which would be like Q1 23-24, we would discuss on this point in a more elaborate manner.
No, sir, I do not want any details about what products or what is the CapEx and all. Just from the delay in getting these approvals, does it not make sense to apply for the approval and all those formalities now itself?
Sir, we will not comment on that, please.
Okay, sir. Thank you very much and wish you all the best, sir.
Thank you. We have the next question from the line of Forum Akim from Equity Capital. Please go ahead.
Hello, sir. Thank you for the follow-up. So, we have been mentioning in the past 2 quarters that you'd be doing a revenue of 800 to 900 crores, but that was assuming that we would start our Unit 5 facility from this quarter at least. So what gives you the confidence of achieving the same revenue number despite a delay in the commercial production of Unit 5?
Very good question, madam. If you will see that in Q1 we did 42% growth in Q1 21-22 in comparison, if you see. So if you put that same formula just as a mathematical formula, this also, you will get this answer that if we did 118 crores and on a year basis we did 584 crores. On a basis of 168 crores, how much it is going to be? It is just a mathematical formula. And generally, we have always seen that Q3 and Q4, have been always a better performance quarters in our business in terms of the fertilizer, in terms of the dyestuff business. I personally don't see, any hiccups. Though we start our Unit 5 somewhere in the Q3 or maybe Q4 completely ramped up, I personally don't see any hiccups or any challenges in achieving the set numbers, what we have said. For that, if you want a detailed calculation sheet, can be also shared whenever, you can write down your details about the query and the questions to our IR team, and we can give you the entire feedback of our prospective calculation that how this number of 850 looks to be achievable. The number can be also, that detailed calculations can be also shared. Definitely that will be just a projection.
Sure, sir. Thank you. So my next question would be on the fertilizer side. So a lot of fertilizer companies have been reporting good numbers, and given the shortage in the fertilizer in the country, it was quite surprising to see a degrowth in the volume for the quarter. So could you throw some color on the same?
Well, first of all, there is no shortage of the fertilizer in the country, and Government of India has maintained its supply volumes in terms of a DAP, in terms of a urea also. Though in spite of Ukraine and Russia war also, the farmers have got sufficient supply of the nutrients of the fertilizers, right? And I don't want to comment on other fertilizer companies' results. I can comment on my results. I can see that there is a dip of around 10% in the total volumes of the fertilizer. There is a degrowth into Kisan Phosphate. There is a growth into Madhya Bharat Phosphates. And Kisan Phosphate degrowth is mainly because we were expecting some subsidies, enhancement by the Government of India, which government did in the first quarter of 22-23. But unfortunately, that enhancement was done mainly for the DAP. Out of NBS policy, SSP was not given any single penny for the enhancement also. We were expecting that the government would increase the price of subsidies. So on the basis of that, we can decide our MRP. But after the subsidy was announced, then we released our, this MRP. So I think it took almost the April month, whereas there was, extremely poor sales, and there was a bit of the confusion by the farmer and the dealer and the company that what pricing to be kept. After the announcement of the subsidy, announcement, then only we released our prices. So based on that, we have lost some business, no issues, but that's not a major issue. That's a short time and a small issue which we'll cover up in coming quarters.
Thank you. We have the next question from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir, for taking my question. Just wanted to understand on the chemicals part. So if we look at the sales volume, it's like Q1 is always like about 1,700 to 2,000 metric ton, while like Q2 is 5,000 plus. So is there any seasonality with regard to the chemical business?
We cannot call it a seasonality. We can call it a buying pattern of the customers. And generally, based off our experience and on the market, the intelligence in production, what we have seen is that, what happens is that all the basic multinationals, they, plan their inventory levels because their financial year ending is from Jan to December. Our is different. So generally, they plan their inventory levels in a different manner. So based upon their requirements and their demand, we have seen that, Q3 and Q4 always is a better performing quarter than in comparison with Q1 and Q2.
And sir, we did about 1981 metric ton of sales volume in chemicals, while last year in Q2 we did about 5,500. But as you mentioned that there is a slowdown in this dyes and dye stuff and dye intermediate. So just wanted to know if we would be able to ramp up our sales volume to 5,000 and above.
Sir, if you will see that in Q1 21-22, we did a total sales of around 1,753 tons of dye stuff and intermediates, whereas in this quarter we did some 1,900 some odd quantity of sales, close to 2,000 tons of sales. So there is always, there's already an improvement of around 15% into the, say, around this, the 13% into the sales volume, what we have reported. And we believe that in coming quarters, we'll be able to ramp up these figures to a better stage.
And sir, just one last question, like, are you seeing any structural disruption in the client space or in the textile industry, in the dye stuff, in the dye intermediates segment?
Sorry, I couldn't understand your question. Please come again.
Yeah. So as you told that there is some pressure on the demand side for dye intermediates and dye stuffs in Q1, and it might remain in Q2. So are you seeing any structural disruption in this?
No, sir. There is no. Hold on. There is no such structural disruption. The problem is that, when the prices have a very large volatility, customer gets confused. And when the pricing is falling, generally it's a human tendency, generally it's a mental thought process of any person whosoever is doing business in any kind of commodity, that, whenever the pricing are falling, as I said earlier, that the sulfur has become almost sulfur has dropped almost up to 25% in last 30 days or so. This kind of, this fluctuation makes a customer confused. Then, in that situation, the customer is not able to plan its inventories, its requirements on a phase-wise manner. Then, he goes on a spot basis. And, when a customer goes on a spot basis, in that situation, the whole things get disturbed. So, this is a human tendency. Whether it is a stock market or any commodity, when the price fluctuation is so high, and suddenly, then customer becomes a bit cautious. If you would have been into the, into the place of the customer, I'm sure you would also behave in a similar manner. But there is no any kind of a structural changes. See, people have not left, like wearing clothes, right? There is no such big economical changes. There is no other substitute of these products. So there is no structural change.
Yes. So basically, it is more of sentimental and price volatility driven rather
It's a
than.
very short time phase. That's a very cyclic issue. Nothing so great. When the prices went so high quickly, it comes down also quickly.
Sure. So it is not linked with the financial position of the customer, right? Like the.
नहीं सर, फाइनेंशियल पोजीशन का इसका क्या लेना देना सर उसके अंदर, मतलब आई डोंट नो आप स्ट्रक्चरल चेंजेस फाइनेंशियल पोजीशन कहाँ से ला रहे हो. आई फेल टू अंडरस्टैंड मिस्टर तिवारी, आई एम सॉरी.
Okay, sure. Got it. Thank you, sir.
Thank you. Ladies and gentlemen, in the interest of time, that was the last question. I would now like to hand the conference over to Mr. Puneet Makharia for closing comments. Please go ahead.
Thank you, friends. We think we are in a good position to take the advantage of overall growth potential, and we are really excited about it. I want to thank everyone for attending, and I hope we have been able to address all of your concerns. If you need any further information, please get in touch with our investor relation partner, OEM Capital. Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Shree Pushkar Chemicals and Fertilizers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.